Hey guys, welcome to the show. My name is Max. The channel's name is The Covered Collar. You can find me on Twitter at Max Convexity Man. Remember, everything you hear here is for fun and entertainment only. Consult a professional financial planner. Hey Jeff, how you doing, bud? Yes, this is the daily factor. I didn't do a top 20 show, or nowadays I do a top 50, but whatever. I didn't do a top show, so I'm just going to do the top 20 show live. And then tomorrow night, we'll start with the normal daily factor where we do it'll probably be Mr. Monday and Tesla Tuesday. And I forget what we do on Wednesday. Then it's closed in fun Friday. I think on Wednesday it's dealer's choice. Anyway, we'll get back to that. We will get back to that regular schedule stuff. But no, I just wanted to have a live stream. We can talk about anything. Once I'm done with the daily factor, we'll talk about whatever comes up. Just like always, I just got done with dinner, and I thought I've been working on a new video all day, but I didn't really like the way it came out, so I'm not going to release it. But I've spent all day recording a video. I'm going to have to work on it a lot. I was trying to get it out today. Hey, Bon, thanks for being here, man. Appreciate you. We got Bon in the house, and we have Jeff in the house. Like I say, remember, not financial advice. Leave that up there. All right. All right. The max factor is my own proprietary metric. I think it's a better metric than total return. The worst thing to do on these high yield funds is to look at yield. Yield's the last thing you should look at. Yield's the most deceiving. Total return could be a little deceiving also. So I made a metric that's a combination of, it takes the good stuff from total return, and it also factors in the risk and stuff like that. And I made my factor called the max factor. Anyway, it's just another way to look at these high yield funds. It's basically risk adjusted reward, but it's different than a Sharpe ratio. It's different from a Sorrentino. Anyway, it's proprietary. So there you have it. All right. So we were doing the top 20, but I thought, so lately I've been doing the top 50, and I don't talk about all 50, but we had just at least count them down. So number 50 is Triple QX. What the heck is that? I think that's from Nuveen. Has pretty good NAV return at 5%, but kind of weak on the yield. Anyway, then we have QDTE. It's the opposite situation. Stronger on the yield, but kind of weak on the NAV return, yielding 36. IWMI is kind of a good balance of both of them, coming in number 48. Then we have SDTY coming in at number 47, yielding about 24% with a pretty weak NAV return. NAV's only up 1.5, and this is in 90 days. So next we have QILG. This one is strong on NAV return. Best NAV return so far, but a little weak on yield. Anyway, then we have IDEVO. Now, IDEVO is really doing a good job on NAV return, 7.5%, little weak on yield. Then we have KQQQ. KQQQ is kind of a good balance of these other ones, and it's the best looking one we've seen yet. Next, we have SPY, which is a perennial favorite. You know, just comparing it to KQQQ, has a little bit less NAV return, but a little bit more yield. And it's probably a little bit less risky also. We can look at the stable decks. Yeah, and it's a lot less risky. That's probably why it got put ahead. On the stable decks, it has market stability. It's about as stable as a SPY. In fact, it's 6% more stable than the SPY. That's what a 106 means. One is the SPY stability. Anyway, KQQQ takes some more chances. You know, it takes some more chances, and it's only about 2/3 as stable as a SPY. Anyway, next we have CRF. This is a good closed-end fund. We have ADX. What's ADX? I forgot what ADX is. I guess, well, we won't look. We'll look if it's in the top 20, and I don't know what it is. It's probably a closed-end fund. That's exactly what it is. Anyway, then we have CLM, another closed-end fund, and these things do a good job. CLM and CRF, you know, 2.3% upside on the NAV, and that's NAV only. That doesn't have yield, but then the yield's about 17%. Then we have Triple QI. This is a perennial favorite that a lot of folks like, yielding 13.6 with pretty decent NAV return at 4% NAV return. We can compare it to KQQQ, and KQQQ they have about the same NAV return. Well, not really. KQQQ has more, but KQQQ also has, but KQQQ has about 30% less yield. That makes a difference. Anyway, double QA, that one's yielding 8%. We have HOW. Wow, this one used to be a lot higher. It's dropped down to 37th, yielding 105, kind of weak NAV return and super risky. It's only 14% as stable as the SPY. It's one of them, probably the second most risky one in the universe of ones I follow. Then we have GPIX. This is a good one a lot of people like. Look at this. NAV up about 5%. Yield a little weak, but whatever. NAV's doing well. WYGold. WYGold's a good-looking one, up to 17% on the quarter with a 5, what is that, 5 or 8? I'm going to have to blow it up. 8% NAV return. Then we have CAIE coming in at 34. This one's a good combination of yield and NAV return. I bet it's also pretty safe. Yeah, it's a 95 on stability. Pretty darn stable. We have SFOL yielding about almost 20%. We have Big Y. This one's a target 12.5 fund from YieldMax. Only yields 10.2%, but it did get 5% NAV upside, which if you look at it and compare it to something like GPIX, same NAV, Big Y has better yield, and Big Y is probably safer too. Big Y is a 95 on stability. But in any event, it just goes to make a better combination of risk and reward. Then we have TLTI. That's based on bonds. That's based on the TLT, and so is TLTP. So TLTI is from NEOS, and I forget who TLTP is from. It looks like TLTP pays twice the yield, but has less than half of the, just eyeballing it, and doesn't quite pay twice the yield actually. And it does, but it does have less than half. It does have less than half of the NAV return, but when you have to factor in stability, and TLTP is 74% more stable than the SPY, whereas TLTI is only 58% more stable than the SPY. But if you're looking for stable income, that's, one of those could fit. Make sure you're bullish on bond prices, though. They're related to bonds. So you want bonds to go up, or else these things will do poorly. All right, IVVW, this is basically the SPY. IVV is iShares version of the S&P, I believe. Is that right? Yeah, IVV. Yeah, that's right. That's right. Look at this, 16% yield. Decent NAV return. NAV return on none of these are doing very well because the market's pulled back lately. A few weeks ago, these same funds were up, 5, 10, 15% on NAV, but we had a little market pullback, especially last week. It's bounced a little bit, but still the market's off highs. All right, QDTY. Now this one, yielding 30% plus a 3% positive or 2.5% positive NAV return. That's not bad. GPIQ only yielding 9.6, but it has one of the strongest NAV returns yet, and that's why it's ranked higher than these other ones. It's an 80 on stability, so it's about 80% as stable as the SPY. Not too bad. Anyway, then we have T-SPY. Now this one is from Tap Alpha. Good looking fund, yielding 13.5, NAV up 5%. Not bad at all. You can see it ranks ahead of GPIQ. It's, the NAV return's a little bit worse, but the yield is a little bit better. You combine both of them and then factor in the stability. Also, T-SPY is a little bit more stable. T-SPY edges it out, but you couldn't go wrong with either of these. Those have both been pretty good investments. Then we have SOXY. Now this is a target 12 fund. It's only yielding 9.59 on a trailing 12-month basis, but they aim for 12%. And this one has NAV return out the wazoo. Look at that, 15% NAV return. Now it's not based on the broad market, so it's unfair to compare it to T-SPY and GPIQ and QDTY, and all of these right here are broad market funds. Now this is more concentrated, and it happens to be in semiconductors, and semiconductors have been hot lately. But still, if 9.5% income works and you're bullish on semiconductors, this one might work for you. All right, next we have JetQ. This is a steady one, yielding 10%. Look at this, tons of NAV return, more NAV return than GPIQ, and a little bit better yield, and I bet it's safer. Yeah, this one is an 89 on stability, where GPIQ is only an 80, so it's 9% safer relative to the SPY. And safer is probably the wrong word. 9% less volatile. It doesn't move up and down as much. That's probably not right to equate it with safety. But still, I would say this makes you less likely of maybe getting a margin call or getting shaken out of a position. These ones that move around a lot, are more likely to hit a stop loss, get a margin call, it scare you out of a position. Anyway, TSMY, this is based on Taiwan Semiconductor. Well, this one's the highest yield we've had yet, I believe. 58% yield. Now, it's just based on one stock, so it is what it is. As long as Taiwan Semi does good, the actual NAV of the fund's only up 3% right now. Then we have SPIN. This is a S&P High Yield Income Fund from State Street. Speaking of State Street, we have XLKI. So XLK, I believe, that's the tech State Street, I believe. So this thing is yielding 14%, and it's up 6% on NAV. That's pretty nice right there, especially when you consider it's pretty darn stable. It's about 82% as stable as the SPY, but you can see why it ranks ahead of T-SPY, because it has more yield, and it's done better on NAV return. And it may even be safer too. T-SPY is not super safe. T-SPY is an 85 on stability. XLKI is an 82. So they're similar. All right. And now we have the top 20. Now we have the top 20. All right. So let's pull up FinViz here and check it out. I just wanted to make sure that XLKI was that. Yeah, it's the Spider Technology Fund, and these guys own that ETF right there, XLK, and then they sell options on that same ETF. They're selling the 295 call, and they've sold some of the 305 call. They're doing covered calls on the whole index. I mean, and something's going right. I mean, yield's decent, and they're catching some upside. All right, so that was number 21. But number 20 is ASGI. This one is a closed-end fund and one of the better ones, or that's what my guys who know about closed-end funds tell me. And then we have GLDI. All right, this is based on gold, yielding 14.7%, 5% NAV upside, and it's more stable than the market by just a little bit. So that looks pretty good. Next, we have IAUI. All right. Well, this one's also based on gold. Doesn't yield quite as much as GLDI, but it does quite a bit better, especially on a percentage basis on NAV return. Now let's see about the safety of IAUI. It's an 81 on safety, so it's not super safe. They take a little bit more risk. So this one moves up and down a little bit more, but still, when you figure in everything, is the extra risk worth the extra NAV? The max factor says so. Anyway, XYLD, this one's from Global X, yielding 11.7%. I can't believe this ranks so high, but I mean, part of the reason is because it's more stable than a lot of the other funds. It's a 104 on stability. A lot of the other index-based funds are 70 or 80 on stability. Anyway, that one's not going to win the dealer's choice or the editor's choice, editor's pick, whatever. All right, K-Gold. Now, this one I really like, and I think you guys do as well. It's from Curve, getting tons and tons of upside at 23%. We could compare it to Gold Eye or IAUI. and it's getting like almost 3 times the upside of IAUI. Now granted, it's not paying quite as much yield, but I mean, you're getting 3 times the upside. Let's see if K Gold's safe. I don't think it's particularly safe. No, it isn't. It's 46. It's a 46 on safety. It's about half as stable as overall market. So it moves around quite a bit. Keep that in mind if you like that. But this one's been really, this one's been a good one so far. All right, QILD, another one from Global X. Good, decent yield, decent NAV, super safe. All right, TLTW. So this one's based on bonds also, just like TLTI. And where were our bond ones at? TLTP and TLTI. So now we have TLTW. And this one has a better combination of reward, risk, safety, stability, 16% yield, 4% NAV upside, and it's 60% more stable than the broader market. The ones based on bonds, because bonds have some non-correlation and some bonds offer diversification to the market. And even though these aren't bonds, these are ETFs that trade bonds, they have some of the characteristics of the way they trade. And then they're selling covered calls on top of that to generate a yield. 16.6 isn't bad for a portfolio of bonds. SLVO, this one's based on silver. Boy, this one's doing a good job. Comparing it to K Gold, yields about twice as much, but it has about half the NAV return. So it would make sense. And it's a little bit safer than K Gold. Still not super safe, only half as stable as the broader market. Then we have Chip Y. Now this thing is a beast lately. It's paying nearly 37%. It's got some pretty decent NAV upside. Then we have XLVI. Now I believe this one's healthcare. XLV, let's see, XL. But this is a State Street sector fund with covered calls. Yeah, the healthcare select sector premium income fund. Boy, that's a good looking chart. Because that doesn't include dividends. That's just the NAV. Now, the dividends aren't huge on something like this, but they'll probably be 12%. I mean, 12% plus NAV that performs like that. That's wonderful. All right, that's XLVI. Now, here we are for the top 10. We have AMDW yielding 69.6, 14.75% NAV upside for the quarter. We'll definitely take that. It's only a 13 on stability, meaning it's 1/8 it's 8 times less stable than the broader market. It moves all over the place. Let's just say that. TSLW, this one's based on Tesla, and it has 12% NAV return and 52%, we'll call it, yield. Nice job. That's from Round Hill. Round Hill does a very nice job. AMDW is also from Round Hill. Good job, Round Hill. This one shouldn't be up here. They paid a one-time special dividend. This thing normally pays 6%. It's a decent fund, but it's not really up there. So ignore XYLG. All right. Goop, on the other hand, has a NAV upside of 30%. I think that's the best NAV upside we've seen yet. It's got to be. Yeah, it is. All right. That's the NAV upside champion, Goop. I mean, 30% and paying an 11.78% yield. I mean, that's something else, right? All right. Next, we have Aptly, based on Apple, paying a 30. It's from YieldMax, pays a 34% yield, and it's got some positive NAV growth this quarter. NAV's up 6%. Next, we have iGold. iGold's, we talked about this in the precious metal show. Was that last night or the night before? I forget when we did. I guess it was last night. We looked at precious metals, but I was just, this one, I always give editor's choice to iGold. I mean, I know K Gold's good also, but usually iGold just beats it on metrics. Not always, and it's, and it's just one guy's opinion. And also it's just looking at 90 days. Maybe inception to date, K Gold's better, maybe over different, depending on your look back period. And I don't have any problem with K Gold either. K Gold is 9% yield and 23% NAV. iGold is 15% yield and 17% NAV. And it's pretty stable. About 2/3 as stable as the broader market. It's also more stable than K-Gold. K-Gold's not super stable. Howard does a great job, but he takes a few risks to get that, to get all that NAV upside. I think Howard uses a little bit of leverage, not in a bad way, in a very constructive way, but I think that contributes to the more up and down action versus some of these other ones. All right, TS2. Now TS2's from Rex. Man, this is a good one. These guys do synthetic covered calls on half the portfolio, and they use a little bit of leverage, and they kind of mixing the round hill strategy from the W funds and the yield max strategies that are in the Y funds. TS2 is kind of a combo platter of strategies. This thing is not very stable. 23% is stable as a SPY, but what do you expect is based on Tesla. Number 2, TSLP from Curve. Okay, well, this one yields 34.6, and it has tons of NAV upside. 18% NAV upside. That's really good. Not super stable. Once again, we wouldn't expect it. And to be fair, it's more stable than TS2. There's a couple reasons for that. One, TS2 uses a little bit of leverage. But 2, TSLP sells options in the monthly time frame. They do monthly covered calls, where TS2 does weekly covered calls. Weekly covered calls add to yield, and you can see the yield's higher, but also detract from stability a little bit. And we can see that right here in these numbers. All right, number 2 is GUI. All right, well, look at this. Now, GUI's yielding, we're going to give that 40. We're going to give it the extra 1 penny there, round that up to 40%. GUI's yielding 40% and is catching tons of NAV upside. 13.75%. Now, we could compare it to Goop. Goop is from Curve. GUI is from YieldMax. And GUI uses weekly options. Goop uses monthly options. That's the way Curve does it. So you can see the weekly options generate 3 times the yield in this case, because it's on the same underlying. But you only get about half the upside. But still, when you have 3 times and then half the upside, that's a better, if you're looking at it mathematically, that you'd be better to have, that'd be a better relationship. Because in other words, you would expect 1/3 the yield if you got 3 times the upside. But these funds aren't perfectly efficient, and some funds do a little bit better job than other ones. And in this case, over these 90 days, GUI has done a better job than Goop. Overall, a better job than Goop. All right, so I know what number 1 is. I bet you guys do as well, because it has to be. There's no way it could be anything else. Now that we see that GUI is number 2, it's got to be GOOW from Round Hill. Yeah, of course. Okay, so now Round Hill, what do? They use 20% weekly leverage. So that's like 5% leverage a day. So not very much leverage, just a little bit of leverage. But they also use total return swaps. It's just a different plan. Who cares what they do? Let's look at the results. They've got 44% NAV upside, and they paid the same yield as the YieldMax product. And I mean, forget about YieldMax. And they paid 3 times the yield of the Curve product, and got more upside. That shouldn't happen. GOW is a beast. I mean, these W funds are good. You can see the W funds came in 1st, 9th, and 10th, but the Y funds, YieldMax, came in 2nd and 6th. Then Curve was well represented at 3rd and 7th. And iGold, I forget who does iGold, but I forget who does iGold, and XYLG shouldn't really be on there. So really the top 10 goes to XLVI because I'm removing that one of them. All right. I hope your favorite fund made it. There's 24 comments. What the heck? What is going on in here? All right. I've already said hi to Bon and Taz. Hey, Red, how are you doing? Oh my gosh. It's Bitcoin. You got to be kidding me. I was having a good evening. Why did you have to tell me that? I haven't checked the market all. Oh, you got to be kidding me. What in the heck? A good thing I got that salty. I mean, gosh darn it. I mean, okay, I always try to give a bullish scenario and a bearish scenario and a neutral scenario. It's just checking this previous POC. There was two-way action there. It got out over its skis. It's very common for check the previous POC, and that's a great place to buy it. Well, who knows? I mean, hopefully it's nothing. Anyway, I'll read the comments and see what you guys think about it. Man, I hate to hear that though, but hopefully it's just a buy the dip opportunity. There's two-way action here before, and and it looks like 84 to 85 might, if it drops further, might be a good place to buy the dip. Anyway, man, yeah, that sucks. And actually, if you see where it turned around on a low volume node. It does that all the time. Lots of times the low volume nodes will turn it the other direction. Anyway, so if it keeps falling, there's another one down here at 85 or something. Hopefully there's buyers hanging out down here, even though there was sellers up here. I guess the neutral cases, we grind for a while. Maybe we trade between 87 and 92 for a week or something. I don't know. But man, I hate to hear that. Hey, Froggy's in the house. What's up? Can you make it bigger? I did, but maybe it was too late. I'm sorry if it was too late for you. Okay, the max factor number, I have it both ways. I have a long-term max factor right there, but I haven't been using that lately. The short-term max factor is based on 90 days. We can look at the long-term max factor. Why gold wins the long-term, but some of these don't qualify because some of these aren't 90 days old yet. So GOW would probably win if it was a year old doing like it's doing. I mean, probably, but all of these right here, TS2, TSLW, all the round hill stuff, the new State Street products, Chippies, not a year old, K Gold, IU, you guys get the idea. So those don't qualify, but yeah, let's look at the long-term results. We had Y Gold, Goop. Now, this is the same metric, but it's just based on a year. GUI. I mean, the Google still dominated. I mean, over a year, that's some pretty good return. Either one of these would work. I mean, it's kind of which one do you rather have? Would you, if you prioritize NAV, you'd be better off with Curve. If you prioritize yield, you'd be better off with Yield Max. But either of these did well, to say the least. All right. And then we have SLVO and iGold. I really like iGold. I mean, I don't know anything about it. I just like the metrics. It's always right up at the top of the list, and it's usually beating the competition. SOXY, everyone knows that's a good one, especially because it pays such a low yield. It lets it catch a little bit more NAV, just mathematically. Like Chippy's maybe Chippy's not a year. I don't think Chippy's a year old. What the heck? Oh, yeah. Yeah, Chippy's not a year old yet. But anyway, yeah, thanks for mentioning that. I know I need to at least run this down. TSLP, TSMY, iDevo is a good one. Gold I and ASGI. That's the 1 year long-term max factor. But good question, Red. Good question. Yeah, TLTW. You got to love it, except for me that sold all of it. Anyway, I had to find something to sell, and so I sold a few things. Anyway, hey, Chad, how are you doing? How are you doing? You made what? What are you talking about? Are you mean Texas made the playoffs? Is that what you're talking about? Surely not. Because I saw a list today and they were still. Heck yes. I did not know that. Holy cow. I wasn't aware of that yet. Or it says they joined the picture. They haven't announced it yet, right? One time. These are just projections. Anyway, tell me in the comments. Oklahoma, Alabama, 8, 9 to 10 spots last week, number 11 and 12. Hopefully Texas will make it. But anyway, hopefully Texas will make it. All right. Yeah, someone figure out why crypto's dropping and put it in the comments. Oh, geez. Now are you kidding me? I was hoping it's just crypto, but of course the market's dropping. They're interlinked. That's EverSource Energy. I do that all the time. Oh my gosh, you got to be kidding me. It's not just dropping a little bit. It's only half a point. But gosh darn it. Here's the bullish scenario. We're back testing this descending trend line. We broke out, gotta hopefully we'll find support here, or maybe we're back testing this this area of support or whatever, this trend line. I forget what I'm even going to call that, but it was just this key area. We may be retesting the breakout at 68.03. So here we are at 68.26. Gosh darn it. Well, I hate to see that. Oh, you guys couldn't see that. I'm sorry. Gosh darn it. You guys know what it looks like. Anyway, here you go. I'll put it up there while I'm talking, so at least you guys have something to look at. All right, then I'm going to keep taking questions for the comments. Sorry about that. All I was showing is that it's back test. It could be back testing this trend line. It broke out, or maybe it's back testing this area right here. That's all I was talking about. Okay, so you guys didn't miss much. Once the check clears, you'll push more back in. Interesting how GDXW has like 2x the yield that GLDW has. That is interesting. That is interesting. I have a theory. Let's go see what we could sell a GDX option for compared to a GLD option and see if that explains it. We'll just do it's all the same, but we'll just do a cash secured put and at the money put. Maybe we should look at out of the money calls though, because that's whatever. The IV is 19 on QQQ. Okay, well, that's good to know. IV is 22 on GLD. I think that's going to explain it. I bet the IV on GDX is more. The yield doesn't just come from the option premium, but it is proportionate to it. Is the yield twice as much because the IV is about twice as much? I guess we could look here. I've had FinViz open. Let's just run them against each other, and then I'll get the yield from here. We know GDXW is going to win, but we'll just go since inception. And I know GDXW doesn't sell options, but still, I'm telling you, somebody's selling options. The way the total return swap pays out, I guarantee you, figures the IV into the equation. So, and I really think the counterparty's probably selling options to pay for the swap. But Round Hill's hands are clean though. In any event, man, this is awesome. GDXW is killing it, but it hasn't been open that long. But GLDW, for just being around 2 weeks, in the past 2 weeks, has done well also. All right, or whatever that is, 8/100ths of a year. That's when it comes. It's 3 weeks old now at this point. No, I guess it's 4 weeks old. It's a month old. What am I talking about? Okay, well, for a month, if you can make 5% every month, that'd be pretty good. But yeah, GDXW is killing it. As far as the yield goes, it looks like we have to multiply that times 12, which comes out to 18, and 18 as a percentage of 50 is 32, 31, something like that. So yeah, it pays 31%. The IV was 42 or something, and GLDW pays 68. What's 68 times 12? What's 70 times 12? 70 times 12, 94, something like that. So something like $9 or something, on 50 on it. So it's the same price. So that is more like 18%. So yeah, it does pay more. I guarantee it's related to the IV. Won't go back to silver since they don't allow drip. I didn't know that. Silver broke all-time highs on Friday. That's amazing. Tom Lee called that. I hope he also called that it was going to be that Bitcoin was going much higher into the end of the year. But his real call on Bitcoin was that Ether was going to vastly outperform Bitcoin and silver is going to outperform gold. The next big bull market, according to Tom Lee about a week ago, he said it's silver and Ethereum. Now, Bitmine Immersion, they're a miner, don't they mine Ethereum? So he probably has a little bit of a vested interest. I mean, I'm not, but time to buy more blocks. It looks that way. Hey, health and wealth. I appreciate that, bud. That means a lot coming from you. Thank you very much. Thank you very much. Blocks, GX, QLDY, loading the boat. Good to hear. Looks like you're going to be able to get them cheaper tomorrow morning because the market's pulling back 0.5%. I mean, it's probably not the end of the world, but if Bitcoin keeps going down, the market could open down 1% or 1.5%. Something happens all the time. You'd probably be in a buying opportunity. I'm not, but anyway, I just want the market to go up every day. Just go steady, just 45-degree angle ups. Just go straight up every day. If the market did that, though, it put option sellers out of business. You couldn't, if the market really did that for some reason, then selling options when you couldn't make, what you make now selling options. Heck yeah. I hear that, Froggy. Heck yeah. Prefer 90-day. Yeah. Well, I do too, because I'm looking for trend and on the year, you miss things that get hot for a little while. Because I switch in and out every couple of months. Every like 2 or 3 months, I'll rebalance. So if something's not working, like I've given jillions of examples, feet wasn't working for me. And so I switched and bought something else. And anyway, but yeah, so I made the max factor to try to stay on the ones that are hot. But if you're trying to do that, it's not just this week, it's obviously Google and precious metals. And it's been that way for about a month on the max factor. But if you were using that to make decisions, it's Google and precious metals lately. Whereas all summer, if you remember, it was actually Coinbase and crypto-based stuff. ULTY did really well, was in the top 10 this summer. Blocks was, always never number one, but it was always like number 8 or something. You sold most, Robert, sold most of Tesla for TS2. Doesn't Rex have the best secret? They appear to. They have some good secret sauce. I don't know that Round Hill secret sauce might not be good also, but no, I agree totally with what you're saying. I agree, but you just looking at performance. I like more conservative strategies too. If you put a gun to my head, I had to put all my money in one of the strategies. I'd do Rex because of the half uncovered, but the 20% leverage, so far it's worked pretty well. Anyway, yeah, no, I got you. I got you when you said that. Okay, I freaked out and I thought Texas made. I checked this morning and they're on the bubble, but they aren't going to make it. I'm afraid. Maybe they will. Maybe they will. Yeah, good point about TS2. We got Greg here. And we got Robert DCing out of TSY for TS2. Well, the Rex shares have been, I know I'm not the only one that's really excited about a fund to funds, or I probably am. So you guys, you have a pair, you'll just buy single stocks, but that's just not for me. So, but I'll probably get that the day it comes out if I have any cash available. And if I don't, I'll probably sell something that's not working or something. But the Rex fund to funds seems to be a really good plan. Rex is well managed. They don't, they have all the good stuff and none of the bad stuff. All right. So let's see here. You guys can ask more questions if you want, but I'm going to go try to find it, download and show it and open it. There's a file I wanted to show you guys, but I forget what it's called. I think it's this one, but it got me thinking, we're talking about Rex. Let's just take a quick look around at the portfolios and see how everything's going. You could see here Rex's ULTI has 6.5 under management. K yield only has 4.7. These daily returns are messed up because it's after hours and there's something that's not. Anyway, that's fine. Just ignore the daily returns. But when at nighttime they do maintenance on the spreadsheets, and so anyway, and that's just pulling it straight off the spreadsheets. But we can go look elsewhere and see what it really is. I guess we should do that. That's kind of basically what I wanted to show you guys. What is this called? Oh, I know what it's called. It's over here, but I'll remember to show it to you guys. I'll remember to, maybe I will, maybe I won't. You never know. You never know. But yeah, this spreadsheet's updating too. But let's look at it this way. Let's see if I can pull it over here. All right. I was just going to say Rex has all good funds and everything. And I do like, gosh darn it, this one isn't working for the same reason. I'm trying to figure out what's going on. It's Alti's not really down 8. Oh, it's because of the split. Oh my gosh. I was like, okay, this isn't working. No, it's not working because of the programmer. Like I always say, there's no such thing. Computers don't make errors. The people that like me make errors. All right. Well, I'll have that fixed by the morning. Let's just look at we can't even look at the daily percent change. Let's do this. Actually, I'll just write it in. What was the daily return on Friday? It was plus 0.5 point, I think. I'll go fix it later. Okay, there we go. So yeah, it was actually 43, I think, or no, 83 or something. It was something, but it got a little bit less than it was like, gosh darn it. It was higher than that. Anyway, now I'm going to have to look it up. $75. I don't know why I was thinking 43. But still, I think it was 4th place among the darlings. But let's go check and see what happened. All right, daily percent change. Oh, there we go. It didn't take the decimal place or something. I didn't put in the decimal place. Yeah. I hate how sometimes it goes away. Oh, it's 0.75. But it went off of percentage. And then it does this every time. Does anyone know how to stop that? I already punched in 0.75. See? And then it goes to no, that's not what I wanted. I wanted 0.75%. Darn it. I hate this freaking thing. Okay. Let's go back to, there we have it. All right. So SPY was in last place the other day. Q's made 81 basis points. So SPY was in last place. Then ULTY made 75 basis points. And they actually beat GPTY too. But then the good ones were QLDY making more than 1%. That's awesome. Especially considering their underlines the Q's, and it was up. They made 20% more than their underline. Like I always call it, it's like tactical leverage. It's like leverage, but just a little bit right where you need it. That it's a genius plan. The lightning spread is. ULTI did well, also making more than 1 point. Great job, ULTI. K yield made nearly 2 points and beat blocks, which is impressive. maybe we can go back to the graphic now because if I fix the spreadsheet, maybe the graphic works better now. No, well, let's just hit refresh. Oh, look at that. This didn't refresh over here for some reason, but the other one should be right though. Blocks is off 18% for the month. ULTI from Rex is off 27 at this point. K yields off 7. WPay is down 8.6. QLDY is down 1.95% for the month. LFGY is down 14, which I mean, it's not great. The only thing you could say is it's less than blocks, but I mean, blocks is basically using leverage or a little bit. So anyway, but yeah, that's impressive. That's impressive. And then these are all up to date too. If you have any questions about the option positions you're doing or whatever, but I already had a show on that. But I'm really liking this, how we can see what changed. Like in the Rex funds added Cypher, Coinbase, and MicroStrategies. You know how YieldMax recently in the past 2 weeks is decryptoified. They've gone from blue chip stocks that are still tech and still have like semi-high volatility, but nothing like no Cypher. That Cypher, Coinbase, I mean, those are crazy ones. But anyway, these guys say, hold my beer. Now, also, they raise cash. They're sitting 18% in cash, but they're not afraid to step up to the plate with 5% in Cypher, 5% or 4% in Coinbase, and 4.3% in MicroStrategies. They also up their position in Bullish, EOS Energy, and Bloom Energy. All these guys are in. There's a couple of companies in on Bloom Energy. Anyway, so we have that. K-Yield didn't really have any changes. They're pretty steady. They still have some Teradyne. Teradyne's their biggest position, which is what, the defense contractor, right? Teradyne, I think, I think so. Broadcom is, of course, big data, big tech. Then you have silver for a little, hedge or a little less correlated action. And then you have that's defense. And then Reddit is tech, I guess, social network, whatever. Shift for payments, isn't that DeFi? I think that's maybe a DeFi. Intel, of course, is tech, data centers and stuff. Same thing as Broadcom, basically. Shopify, and then AppLovin. AppLovin, I mean, my gosh, what do you think the yield on what could you get for an AppLovin option? This is one of the more volatile ones, right? I thought it was, maybe not. It's only a 58 on a volatility, but anyway, it's more volatile than that would be a kind of stock like ULTY from YieldMax used to have, that, or maybe a well, so let's see what Cypher options go for. 122%. Yeah. What about APLD? That's one that YieldMax used to always have. 106%. Anyway, so they're cutting those types of ones out, and they're putting in ones like, let's look into what Broadcom is, AVGO, and they're adding ones in here like that are lower percent, but then they're adding an extra leg to try to make up some of it. But I really think ULTY will drop from about 80 to about 60. And I think that'll help I think it'll help the NAV, of course, because it should definitely help the NAV. But I hope that they also made this portfolio is more correlated. The new build of ULTY is actually more correlated because they want to go up if the market goes up, is all I can figure. So it's more correlated to the market and less correlated to the other one was totally uncorrelated. So it could do anything. Anyway, but yeah, the 60% ought to help because it'll give it it won't start in as big of a hole every time. All right. So you guys saw that. All right. No. Gosh darn it. I have too many windows open. There you guys are. All right. So yeah, I heard Lane. What do you guys think about that? I heard that. Heck yeah, Curve does a great job. So does Neos. You know, I heard about Lane going to LSU. Boy, I bet. I mean, a few years ago, I thought Oklahoma had a really good coach, Lincoln Riley. I really liked him. He's the guy that recruited Baker, and well, not really out of high school, but anyway, he was the guy that coached Baker up to get a championship, and he definitely recruited Kyler, and then Kyler got a not a national championship, but a Heisman Trophy 2 years in a row. He was a great quarterback coach. And I was mad when he went to USC, but a lot of people in Norman hated him. I mean, for leaving. And but I was down here at the time. But yeah, all my friends in Norman just think he's a traitor, just hate him. Anyway, I guess Lane Kiffin has the same energy now, and in where Ole Miss is, Oxford, from what I understand. I understand that he made a lot of people mad, and I know that that our coach Lincoln Riley made a lot of people mad when he went to USC. But heck, they were offering him so much money. I mean, we can't compete with California. I mean, you know. Anyway, but yeah, he would have. But can you imagine though? He would have been better off staying here and going in the SEC. I mean, maybe, I don't know. Going out there to USC is a big deal, also, I guess. But yeah, Lane's press conference is on. Yeah, Lane's snap is going down. Yeah, he won't do any better. No, I hear you. I hear you. No, but he was whenever the Oklahoma job opened up after Bob Stoops quit, and then after Lincoln Riley moved. So 2 times in the past 10 years, it's opened up, and he's always a name that's mentioned. They used to mention Jeff Lebby, but we got him as an offensive coordinator. But yeah, they used to always say he may come here anytime any job comes open for the past couple of years. Lane Kiffin might be in on it, you know. Anyway, no, I hear you. Okay, what's the Fed chair speaking tomorrow? Okay, so hopefully, let's go check the market again. This time I'll make sure that you guys can see it. Well, you guys saw it last time, right? Yeah. Okay. All right. Yeah, I mean, it's not trying to zoom in and get a little better resolution on it. Looks like we sold off, went under the line, and then bounced right and then left a rejection tail behind. And these are 30-minute candles. I mean, I think 30-minute candles are good to use. I don't know. But anyway, you know, it went a little too far past the line, and then it left a rejection tail and then went back up, and it looks like it stopped there, and now it's like in between. But hopefully it's just back testing that trend line, and by tomorrow it's up here checking this point of control at 68.74 and beyond. And beyond, maybe even going up here to 6,900. But anyway, we got well ahead of ourselves for a while, and we haven't stepped back to check a POC, a point of control. Right here, we almost did with this one-day sell-off. We pretty much did, and that's probably all we're doing. We're just checking that. That was a great place to get it. This probably is too. Nothing to worry about. Nothing to worry about. All right. Well, so with the Fed chair speaking tomorrow, it'll probably be boring, and the market will probably go sideways until the news comes out. Lots of times, especially if it's Powell, on the day of the press conference, the day or two before, seems like the market just grinds, obviously. And then as soon as he talks, it goes one way. And then as soon as the announcement comes out, usually goes one way, then it goes back the other way 30 minutes after that when he starts talking and says something. Yeah, I know Bitcoin's taking a dump. Gosh darn it. Let's get Bitcoin futures up here, or Coinbase is fine. Coinbase is the whole deal. Yeah, I know it. Just checking this previous point of control, hopefully. Got a little bit ahead of ourselves, check back here, we find buyers, and then we're off to 95. Then we make a new high and go check the POC higher. Maybe, I don't know. We'll see. Yeah, Alti is super new. I was just saying, Alti is super new. It's super new. And Matt and I spoke before the holidays, and he wants to come on after the holidays. So I'll send him an email tomorrow. But he's the portfolio manager from ULTI. But But that's why also I've been trying to do a lot better coverage lately. I'm actually following the same stuff that ETF Inspector follows. I mean, I have all the new positions. I have everything I need right there. So, and I know every stock position, and I'm trying to generate some better content, because I think that's the most compelling story in high yields right now is, hang on a second. I can finish that anytime. Randy has some information here. Margin calls tonight over 180,000 total liquidations, up to people that had till the end of the weekend to come up with money, probably till 6 o'clock Sunday night or whatever. And then that's the time the clearinghouse cuts the positions loose or whatever. Yeah. Okay. Man, I hate to hear that. Hope it's no one in here, but it's probably crypto degens that were on 50x leverage. That's what I'm hoping. Oh my gosh. In Asia, gosh darn it. Let's get over here to, let's ask Claude. All right. We'll see what Claude says. I realize you guys can't see that. See, I realized it in time. I'm always approaching my weekly limit. I really need to subscribe to Max. As the station keeps going, I will. Right now I have premium, but there's a level above premium called Max. All right, here we go, guys. I'll zoom in. I'll make sure you guys can see that. I think you guys can, but I want to make sure. All right. Yeah, no, I hear you. Is what now? Is there a Fed emergency meeting scheduled tomorrow? I hadn't heard. Anyway, let's see what Claude says. I guess I can read it on this screen. Okay, anyway. Based on the latest news, major crypto CoinDesk currencies fell Monday. Well, yeah, no. Ethereum's down 5. Gosh darn it. I jinxed it when I was talking about that. So what's this? On November 30th, when a malicious wallet executed an infinite mint attack that created 200 trillion. I haven't heard about that yet. They created 235 trillion Ether, or Y Ether is probably a stable coin. I don't know what that is. Anyway, an attacker exploited a vulnerability to Mint Unlimited. It was drained, oh my gosh, from balancer liquidity pools, which was then routed through Tornado Cash, whatever all that stuff means. It means somebody got ripped off is what it sounds like. The early Asian session sell-off triggered exceeding 400 million. Yeah. Of course, it's already dropped 17% this month. Okay, you guys see that. The rest of that's just kind of standard stuff. But I had not heard about the infinite mint loop yet. I guess you guys have heard about that. Yeah, isn't Neo supposed to come out with their boosted product this week? But yeah, it's going to be a big week. I'm excited about it, and hopefully I'm going to have the guy from Rexon, Matt. I spoke with him before the holidays, and he said I'll come on after the holidays, so we'll get him on. His fund's doing a lot better. It's bounced off the bottom. I mean, it does go up a lot. I mean, it has the ability to catch 3 and 4 times the upside as the market. But it works both ways. Got off to a pretty rough start there. Anyway, I guess so. I mean, that's the way I read it, Froggy. I just asked him what happened. And I mean, I guess I could dig deeper and ask him. I should have asked Grok, because Grok could have checked social networks. But since I pay for premium, I use Claude all the time. Just Claude's really good too, but I probably should have asked Grok. Gosh darn it. Let's go ask Grok. Grok will know better. Grok's more tuned in with the crypto bros. I don't know what I was thinking. All right. I asked Grok, I said, why is it down 3.7%? Is there a rumor? Is there news? Let's see what Grok says. I'll make it bigger. Oh, shoot. Fading. Okay. Well, anyway, Bitcoin has indeed experienced a rough 3 to 4% pullback, trading around 90 to 91 after dipping towards 87 earlier this week. This fits into a broader November decline of over 20% from its October peak. That hurts. Above 126, making the worst monthly performance for Bitcoin since 2022. While no single breaking event explains the exact overnight move, it's driven by a confluence of ongoing macro pressures, technical breakdown, institutional selling. Oh, that's great. Rather than a fresh rumor. Here's a breakdown of the key factors based on recent market analysis. Fading hopes for aggressive rate cuts. All right, but once they put the new chairman in there, he'll cut it to zero, I would think. Anyway, but for now, okay, markets had priced in near certainty 90% for December. All right, however, recent data shows it's around 40. Okay, gosh darn it. That, of course, that hasn't helped. The uncertainties amplify a weakening U.S. labor market, of course. Overnight tie-in, late November Fed speakers include a sudden flip in rhetoric, reigniting fears of tire policy. Okay, so that's probably, I hadn't heard that yet either. 1.8 billion in net outflows since mid-November, with longer-term holders dumping a record 815,000 BTC, or 75 billion over the past 30 days. The highest since 2024. This includes profit taken by Wells and treasury firms like MicroStrategy. So MicroStrategy is dumping a bag on people. Come on, MicroStrategies. I thought they would hold it forever or whatever. What are they doing? They probably needed to issue some more preferred stock or who knows, or to pay, no telling. Anyway, supply shocks from Mt. Gox creditor distributions and German government sales over 200,000 Bitcoin earlier this month continue to weigh on sentiment, creating excess supply with thinning liquidity. Bitcoin's market depth has fallen 30% since October, 30%. That's scary. Overnight tie-ins stabilizing, but negative ETF flows couldn't offset into month rebalancing by institutions. Anyway, this is stuff we already know about support and resistance. No major rumor. But they aren't picking up on the thing Grok told us about the attack. You know, I mean, not Grok. They didn't tell us about whatever Claude told us about. I don't know. I may need to switch. I may need to buy Grok Premium. I do have Grok, some kind of something on him, but not Premium. Yeah. Okay. So it's knee high. Let's check that out. That one looks pretty cool. I was looking at that one just a little while ago. I may even have the prospectus in here. I hate when they switch my freaking search engine to Yahoo. Google would have got it. It knows exactly what I'm talking about. Yeah, no, I'm excited about this one too. The good thing is it's new and Ether's low. So if somebody was wanting to start a new position, oh, this is a different fund. This is a different fund. Yahoo sucks. Neos funds, they don't have. All right, here we go. Yeah, they have a great lineup. I mean, does anyone have triple QH? I mean, I don't have it because it doesn't a high enough yield, but I mean, it's probably be a good one to have if the market keeps going down. It's a hedged equity fund that still pays a yield. Anyway, we'll look at that one in a second, but let's talk about the one you guys want to talk about. Because I think they have a web page up for this. Yeah, there it is. Oh, no, that's knee high. It was knee high. I know there's a perspectives because now that's the one I just clicked on. Well, anyway, now I'm excited about that too. I'll definitely put it in the max factor as soon as I'm able to. Yeah, but I just want this darn market to bounce. Anyway, it sounds like you guys are buying stock in the morning. So people who are buying stock anyway will get a lower price in the morning. That's another good way to look at it. I need to get something too. I probably need to get QLDY and WPay. I've been talking about it for a long time, but I think those are my next two purchases because I don't have enough of either one. I want to bring those up to the same level that blocks and ULTY are at. And I think that'll help also. I really like those. Hey, John, how you doing there, bud? Thanks for being here. Well, let's look at an Ethereum chart. Yeah, good call on Bloomberg. I didn't think about that. I never look at Ethereum. I can't really tell how bad it looks sometimes on a shorter term chart, especially one that I don't see every day. So let's look at the daily chart. Yeah, that's pretty ugly. I mean, of course, 5,200 all the way down to, it just trades so much different. I mean, it just now crossed under its 200 day. I mean, November 13th, midway through the month, and it's dropped from 34 to 28. I swear nothing good happens under the 200 day. I don't know, unless the dip gets bought. It depends on how. Sometimes when it's been under there a couple of months, it's the best thing ever. So I don't know. But when it first goes under, I mean, it's not good. I mean, on this one, I mean, it looks like we've already checked this area down here at 2,600. Hopefully that area will hold, and we don't have to go back and check 1857. Yeah, but they are getting trashed. Oh, you have triple QH. Okay, well let's run triple QH against something. I don't think it's super old yet, so I don't know, but let's run triple QH against triple QI. Two good funds. Well, let's run. That goes back too far. Triple QH hasn't been around that long at all. All right, let's try it this way. Well, there's something's jacked up with the chart. It used to be a different company, and you have to know the exact date. I've gone through this jillions of times. It's like, try this one. All right, there we go. I'll make it bigger so you guys can see it. So triple QH is up 18.4%. It's been 3/4 of a year. I didn't realize it's been out that long. I need to make sure it's in the max factor. I don't think it is in the max factor. It may not pay enough yield. What's the yield on this? $3.62 for 3/4 of a year. So maybe $5 all year. And it costs 49. So it's about a 10% payer. I mean, that's not bad. It looks like in the pullback, it was down a little bit less. Anyway, we just don't have that much data, but yeah, that looks like a decent one. That looks like a decent one. Neos is just with it. Neos is a good company. No doubt Neos is a good company. All right, guys, if there's anything else you want to talk about, put it in the comments. My fantasy team's raging. I was just going to see what the score was. I'm 7-5, but I'm going to be 8. I'm going to be 8-5 after tonight. I'm 7-5 right now, but I'm ahead 126-77. His team's not finished yet, but they're projected to get 177. I'm in the clubhouse with 126. He's not going to catch me. So the Austin Bucks go to 8-5. I'm happy to announce. All right, guys. Well, I appreciate you all for being here, and I will talk to you later. Remember, this is not financial advice. Check anything you hear with the licensed financial planner. And other than that, don't forget to like and subscribe, and I will talk to you guys later.